welcome back to my channel. This was easily the craziest week that I've had so far on Robinhood. A lot of movement going on with my stocks, a lot of political turmoil, and really a big risk. The big news this week is that I did go ahead and open up a margins account with Robinhood. What does that mean? First, I have to pay for Robinhood Gold. The base fee there is $5 a month or $60 annually. This gives me advanced data and charts, access to Morningstar reports for better stock trading. It unlocks option trading, which I'm not going to get into now, and I don't think that's really for me. Next, it unlocks margin trading, which is the big deal for me. And the first $1,000 of that margin is free. It's included in the $5 per month Robinhood Gold base fee, but there's a 2.5% annual interest on any money borrowed after that. So for instance, if I borrow $2,000, I owe $60 in interest annually on that first $1,000 due to the base fee of Robinhood Gold. The next $1,000 would incur an interest of $25. We can see per month, that's about $2.08. You can make that calculation with the amount of money past $1,000 you're borrowing, in this case $1,000, times the rate, which is 2.5% divided by 12. So that gives me $2.08 per month. Takeaways here are that number one, the more money you borrow, the lower the interest rate actually is. And this is where it starts to get a little bit scary. The maximum rate, let's say if you're borrowing $1,000, is going to be 6% because you have to pay that $5 per month fee, which adds up to $60 at the end of the year. The minimum, absolute minimum rate that you could pay is just a smidge over 2.5%. The more money you borrow, it's going to get closer and closer to that 2.5%. Exponentially riskier than standard buying is the best way to talk about this because you're borrowing money. If your investments lose money, you not only are losing money on the investments themselves, but you still have to pay Robinhood back the money that you borrowed from them as well as the interest. For every $1 in stock I buy, I'm now eligible for an additional $1 in margin loans. The interesting note here is that cryptocurrencies and some stocks, most notably those trading under $2, cannot be borrowed against. So for instance, I can buy a stock and use my margin to buy Bitcoin, but I cannot buy Bitcoin and use that to hedge and buy stocks. Big takeaway here, what is the calculation? How will this affect the numbers in my portfolio? And the simple way that they calculate it is using the portfolio value, meaning the total value of all holdings minus the margin used. So in other words, it's not going to change any numbers in my account per se. If you were to add up everything in my account, it would be higher than the account value is showing, but it's really because they've accounted for that already. I'm sure this is not a great review. This is not the most comprehensive way to look at it. If you have any other questions, please feel free to comment down below. I think it's a very interesting topic, and I think it's important to talk about it because of how risky it really is. But without further ado, we will get into the rest of my portfolio. So the question is, what did I do with that money? Obviously, there were a lot of moves, as I mentioned. So the first was I deposited another $150 into my account last week. Total investment is now $11,600. With that, I purchased one share of JNK. I now have 3 shares of that. That is my bond ETF. The price there was $108.86. Next move was to purchase $40.01 of Bitcoin, bringing my new position to 0.316 Bitcoin. The price there was $36,131.02, and the quantity purchase was 0.001. Then the huge move is that I decided to sell the largest holding in my portfolio. I sold all 27 shares of Sunrun. Total credit there was $2,212.11. Average price per share was $81.93. If you've been following this channel for a long time, you know that those came over from my Vivint Solar purchases over a year ago for the most part. And total cost there was about $670, and I sold it for $2,200. So that is just incredible. But then, what did I do with that money? Well, again, I decided to borrow money from Robinhood to purchase more Bitcoin. I purchased 0.142 Bitcoin, which is enormous. Total cost there was $5,013.31, bringing my new position to 0.4588 Bitcoin. Price there was $35,189.19. As we'll talk about later in the video, that turned out to be a not so great decision as Bitcoin plummeted today. But again, I'm in this for the long run. So that catches you up on what I was able to do for this week. I think it's interesting and definitely worthy of note. So on the day, I am down over $1,000, the vast majority of that being with Bitcoin. Over the past week, down about 10% or $2,400. Over the past month, still up about 17% or over $3,000. $7,000 over the past 3 months, up $9,600 over the past year, and all-time now up $9,874. So down from last week, only about 85% on my all-time gain, but I'm very happy with this. And again, I think this is sort of a blip for Bitcoin moving forward. These videos are getting increasingly complicated, so please drop a like on the video and subscribe to the channel. It means a lot. First stock that we'll talk about today is my Vanguard Total Stock Market ETF. I've mentioned this one many times. It's going to encompass the entire stock market and give you a pretty good idea of what's going on in the market, and is trying to replicate that as best as possible. So total return here is up $250 or about 26%. On the day, up a minuscule amount. On the week, up a little bit. Month, up 4%. 3 months, up 15%. 20% on the year, which is great to see, and 109% over the past 5 years. This one does pay a small dividend. We can see the yield here is about 1.39%. It's not huge, but nice to have. That is a quarterly dividend. I think this has been one of the better stocks in my portfolio, and I'm very happy with my position here. Market value being just over $1,200. Next up, we have Microsoft trading at $225.20. Total return here is up $188 or about 20%. So another good performer in my portfolio. This one has stagnated a little bit as of late. For the past week, we can see it is up 6%. Over the past month, it is down slightly. 3 months up about 5%. Over the past year, up 35%, and 5 years up 337%. Of course, we think that tech is going to perform particularly well in the next 5 to 10 years. I've mentioned it before, but a lot of cloud infrastructure here, that is where they're making a lot of their money. And if we look down at their earnings, we can see that their earnings have been extremely strong and trending upwards. This next earnings call is coming up very, very soon. By the time this video comes out, that earnings call will already have happened, but I'm very happy with my position here. Let me know what you think about Microsoft down in the comments. Now we'll talk about one of the best performers in my portfolio, which is Logitech, trading for about $105 right now. We can see my average cost was only $51. Total return is over 100%, up $270 on this. It is a smaller makeup of my portfolio, only about 2.17%, but very happy with that over 100% gain. I have mentioned before, the dividend yield here is not great. There's a lot of projections that that dividend will continue to grow, but at the same time, this is a Swiss company, which means that a large portion of that yearly dividend is actually withheld to pay Swiss taxes. So that's something definitely to make note of if you're looking into purchasing Logitech or any other foreign company. Over the past week, up a tiny bit. Over the past month, 10%. 3 months, up 14%. Year, up 118%. And 5 years, up 653%. This has been a very solid performer in my portfolio. It is pretty high. If we go down here, we can see the price to earnings ratio is still only 17.6. Last I checked, the S&P 500 was about 22, which historically is very high. So I think that there is still a lot of room for growth here despite the high price. Now we'll talk about JNK. This, of course, being the bond ETF that I mentioned previously in the video. I'm up to 3 shares here. Average cost is $102.64. The goal with a bond ETF is slow, consistent growth. So the vast majority of the growth here is going to come out of that dividend. Dividend yield is about 5% right now, which is pretty good. Again, this is not something that you're going to see massive returns on, but more stable returns. So trading for about $109 right now, up 0.4% on the week. Month, up 1%. 3 months, up 4%. Over the past year, down 1%, and only up 11% over the past 5 years. So that's exactly what I was talking about. Very little movement. Of course, back in March and April of last year, we can see it dipped. So it was peaked at $110 and dipped all the way down to $86. Which is a very large drop-off. But at the same time, compared to a lot of large companies, that drop-off was not gigantic, and it has recovered pretty well. So I think this is a good way to sort of hedge my bets against things like Bitcoin and some of the riskier stocks in my portfolio. Last stock for today is going to be Apple, trading at $136.35. This is one of the smallest holdings in my portfolio. I only have that 1 share. That being said, I am up about $15 on this. 12.5% return, makes up less than 0.5% of the portfolio. Apple is a company that a lot of people think is slightly overvalued at the moment. If we go down here, we can see the price to earnings ratio is 39, which, as I said before, the range in the S&P 500 has typically been between 18 and 20 would be the comfortable range for analysts. So this is pretty high. That being said, Apple's latest earnings call is coming up very soon. I've seen experts saying that they could see a gigantic spike in earnings for this last quarter. So it's something that I'll definitely pay attention to. I think both in terms of Apple's stock in the greater stock market, that'll be very interesting to see what happens. So if we zoom out to the month, we can see up 1.6%, 3 months up 16%, over the past year up 71%, and 5 years up 454%. Very strong buy rating here on Robinhood. That dividend is pretty low, about 0.6%. But again, I believe that these tech stocks have a lot of room for growth in the dividend category. So getting in now could be a pretty good play headed down the road for when this growth slows down a bit. Of course, we got to talk about Bitcoin. Average cost is all the way up to about $19,000 now, but that quantity has spiked all the way up. Quantity is now 0.4588, as I mentioned before. Makes up about 60% of my portfolio, which is higher than I would like to see, but at the same time, I think the growth in Bitcoin over the next year will definitely be worth that risk. I've talked about it in previous videos, but the estimates that I've seen are around $300,000 for the peak of Bitcoin later this year, sometime in December. I don't know if it will hit that high, but I am very positive about the outlook for Bitcoin over the next year. So we can see my total return is up about $5,800, or about 66%. Even in the last week, that total return was as high as 200%. But of course, when you purchase $5,000 worth of Bitcoin at a very high price, that return is going to decrease. Over the past week, we can see it's down about 16%. Over the past month, still up 40%. 3 months up 150. For the past year, up 260, and 5 years up 8,000%. The big news here for the week is that it continues to dip. So we can see that it peaked here on January 15th, about $38,000, and it's trading now for about 32 and peaked, or rather hit a valley this morning below $30,000. So purchasing at $35,000 yesterday seems like a very big deal in the short run, but in the long run, I'm still very positive about this. Let me know what you think about Bitcoin down in the comments, and I'll be back with another video next week. Thanks.